and BlackRock have the third largest position in Bitcoin in the world. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. And what they are technology networks. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. It's been around longest. It's got the most number of nodes on the network. It's got the highest value settled of all. If you want fast, cheap, and effective, Solana's been doing great. And if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be Sui, which came out of Facebook.
Macro investor and Real Vision co-founder Raoul is doubling down on his call for the next great crypto bull run, a rally he believes could last well into 2026. In his latest market breakdown, Powell says all signals point to a massive acceleration point that's turning up as we speak. Historically, this has fueled massive price gains across the entire crypto market. But here's the twist. Powell warns that Bitcoin dominance is topping out, which could set off a rotation into Ethereum and other major altcoins. And ETH, he says, is perfectly positioned. Now institutions and mainstream analysts are floating price targets once believed were impossible. Bitcoin is currently sitting just over 106,800, still down over 5% in the past week, while Ethereum sits just under 4,000 after a strong run. Powell believes these numbers are just the beginning, with Bitcoin breaking through 120,000 again soon, and ETH heading toward uncharted highs as adoption accelerates. The bottom line, if Powell's liquidity thesis plays out, we're on the edge of phase 3 of the banana zone, a high momentum phase where prices can go parabolic. And for him, crypto remains the single best bet to outpace currency debasement. Let's get right into the latest interview with Raoul Pal, as he gives his latest crypto market outlook and why he says the bull run is only getting started. Drop your comments down below and subscribe if you enjoy the content we do here.
You know, these digital assets have been around for quite a long time now, over a decade. And most of the time it was retail participation. And even with stable coins, that was a retail thing. Tether was really, you know, Asian retail be able to send money around the world and South America. And then it became Asian corporates were using it to get around capital controls. So like Malaysia to China, stuff like that, to get around the FX cross rates. So we saw a bit of that. And then this year, as soon as obviously MiCA regulations in Europe came, and then the US just basically opened the door to it all, we've seen an absolute explosion in the space on the institutional side. So when we look at the adoption of the space overall, it's been growing. When we kind of rebase it to 5 million active wallets versus, let's say, 5 million IP addresses back in the early 90s, for the internet was the fastest adoption of any technology the world has seen. Right now, crypto, since that date, has doubled the speed of the internet adoption. So it's been the fastest adoption of any technology, and it's now been superseded by AI. So what we've seen is massive adoption. We've now got 950 million active wallets. It's projected to get to about 4 billion by 2030. So that's going to be half the world. Now, most people have multiple wallets, so it's not fair, but so we're seeing that. So wallets are becoming more normal. And then we're seeing the institutions building all of the rails. And stablecoins is the killer app for institutions because it's just faster, cheaper, more efficient. So we're seeing everybody from Visa to MasterCard to PayPal to you name it, all using these rails. And we're going to see corporates doing it as well. So multinational corporates can move money around their corporate headquarters. You know, let's say you're a metals and mining company and you've got operations in Angola, Nigeria, Brazil, right? You need to move dollars around the world to pay staff, do stuff. It's actually hard because a lot of them have capital controls. But if you have an internal stable coin, okay, that makes it really fast and efficient. So I think there's a lot coming. So the way I look at it as we're a $4 trillion asset class today. If I compare it to global equities, 200 trillion, global real estate 300 trillion, global bonds 250 trillion. So we're nowhere there yet. So if I just look at the trend rate of growth, I think we get to 100 trillion by about 2032. So that means we're only 4% of the way to 100 trillion. And that's still half the value of global equities. Now, what is the value of this thing if all equities, all bonds, and all real estate go on chain? I don't know. It's obviously not the value of the whole thing, but it's still going to be a large value. So all we're saying is we're 4% of the journey there, which makes it what I've said is the greatest macro trade of all time, because you've got this adoption curve of a technology. And unlike the internet, you can actually own a fraction of it via a token. It's amazing.
How do you see DeFi, gaming, real world asset tokenization? You got a guess on what are going to be the big sectors?
I don't, but look, we know that, as we said, asset markets are going to get tokenized. There's a lot of people who want to tokenize real estate, but I'm not sure there's buyers of those tokens. All the real estate people want to sell tokens to find more liquidity. We're seeing the asset management industry, people like Apollo and stuff, talking about tokenizing theirs. I think what they're trying to do is find new buyers for private equity. So that kind of, I'm not sure how big that is compared to equities, which is a very efficient way, bonds, money market funds, that kind of stuff. I think that's really efficient. The gaming is a huge market. Billions of people play games, super active, and they exchange assets. And most of those assets, you can't move from one game to another, so you can't have value, because if you lose your login, your value's gone and all of this stuff. So it solves that. Even bigger than all of that is actually the move from Web 2 to Web 3. And that's stuff like digital identity. Right, that's an 8 billion person TAM.
Yes.
We're all going to need it when it comes to AI, right? Who's a human, who's not? Then you have this nice technology like zero knowledge proof. So that means that Drew can verify all his documentation, but he can remain anonymous online, and it can be proven that you've passed all your KYC, and then everybody can accept it. So that, we've seen stuff like that being done in India with Aadhaar, and that was a $1.3 billion digital ID. But we're going to see this at scale across the internet, and you'll have multiple digital IDs.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
We've got putting of basically any verified information on chain. If you think of an NFT, a non-fungible token, what that really is a contract. So then when you think about it, okay, well, that's probably the insurance market because there's big value and it's settled on an outcome. We're seeing that with prediction markets, gambling, they're big markets. But we'll also see it with all ticketing. Basically, every ticket is more efficiently done as an NFT, and you've got other things, you can build social graphs and stuff around it. So the scale of this thing is much bigger than people still understand. And so even at $100 trillion, what is the value of the internet today? That's kind of the question we're asking. What is the value of this? It'll be probably one of the most valuable things humanity's ever had, because it is, for the digital age, the global store of value, transaction layer, and kind of contract settlement layer. Now, everything that humans do is basically a contract. Even you and I today, it was an email, but it was like a written contract. Says, yeah, hey, I'll turn up today. All the people watching this, it was a contract. Every time you buy something in a shop, every time you use a credit card, they're all contracts. And a lot of this can be done much more efficiently via these rails. So basically, Bitcoin, just think of the digital gold story. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. And what they are technology networks. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. It's been around longest. It's got the most number of nodes on the network. It's got, the highest value settled of all. If you want fast, cheap, and effective, Solana's been doing great. And if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be Sui, which came out of Facebook. So these are like thinking about cloud storage or other big network things that you use. That's what these are. And people confuse it because the word currency comes up in the title. The currency part is basically, think of it as the equity of the network. It's the value of the network. You also need to use that token to have a slot on the network. So you're paying for a space on the network in a native equity token. That's really all it is. And they're just technologies. And it's like breaking down component parts of the internet and being able to do that all over again. And so when you build these rails, you've then got things like decentralized storage layers. So right now, if you're an institution, you're probably storing everything that you do. Either you have to have your own massive mainframes, which is expensive and out of date, or you're using AWS or Microsoft Azure. So you've got now all of your private data with some giant corporation who the US government can actually get the information from. Well, maybe there's different ways of doing that to make it more robust to hacking, to make it more robust from state-level attack, and that's decentralized databases as well. So there's a lot happening within this space, and those three are basically the pioneers of what are known as layer ones, the kind of settlement layer of this new internet.
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.